Hey, what if I told you that Bitcoin moves with the moon? New moons, full moons. What if the price really reacts to a satellite hundreds of thousands of kilometers away? Sounds insane. Now look at this chart with the indicator on it. See that? Bottom near the new moon, top near the full moon, again and again. Looks almost too perfect, right? But before you put the moon on your chart and start trading it, watch this video till the end, because there is another side to this story. And it changes how you should look not only at lunar phases, but at almost every indicator you use. Today we are asking one simple question. Does the market really follow the moon? First the science, and it's surprisingly convincing. Then a real Bitcoin backtest over 13 years, and that's where things get brutal. After that we'll look at some of the craziest space indicators ever used to predict crashes. And at the end I'll give you a simple 3-question filter. In 30 seconds it can expose almost any weak trading idea. Drop a like and let's dive in. First, why this idea is not pure nonsense. The moon and the market is not just a meme, there is actual research behind it. In 2003, Dichev and Janes studied 100 years of the US market and 24 other countries. Their conclusion: around new moons, returns were about twice as high as around full moons. 3 years later, Yuan, Zheng and Zhu tested 48 countries. Same result. Around full moons, markets were weaker, and the result was statistically significant. And here's the crazy part. They also removed the other calendar effects. It was not January, not the day of the week, not holidays. The lunar signal still stayed there, almost like it was real. Why could this happen? The theory is actually elegant. For centuries, full moon have been linked to worse sleep and more anxiety. More anxiety means less appetite for risk, less buying, lower returns. So the moon doesn't push the price directly, it may push the mood of the people who move the price. And this idea is not new. W.D. Gunn, one of the big trading legends of the last century, actually used astrology in trading and wrote a lot about it. Even today, many technical analysis ideas still carry pieces of this thinking. Now let's move closer to our time. One trader posted a study claiming that in 2021, if you opened longs on full moons and shorts on new moons, the accuracy was around 80%. 80% on Bitcoin. So now we have research across 48 countries, trading legends, and an 80% result in crypto. Maybe there's really something here? Now here's the part that lunar gurus usually don't show you. That famous 80% result from 2021 is just 1 year, one cherry-picked year. Give me any lucky slice of history and I can fit the moon, a horoscope or almost anything to it. So I took the popular moon phases strategy from Lux Algo and tested it on Bitcoin not for one perfect year, but for 13 years, from 2013 to 2026. Over 13 years it lost 32.5%. It failed. Only 45% of trades were profitable. Out of 325 trades, less than half closed green. A coin flip wouldn't be worse. Profit factor 0.93, meaning losses were bigger than gains. Sharp ratio negative, maximum drawdown almost 71%. The average drawdown lasted 357 days, almost a full year underwater. The average growth period lasted only 101 days. So for every 3 months of joy you got about 1 year of pain. And here is the knockout. During the same period, simple Bitcoin buy and hold made almost 61,000%. $1,000 would have become around 600,000. So, what do we have? In stocks over 100 years, the effect may actually exist, but it's tiny, maybe a few percent per year. Bitcoin can move that much in 1 day. This micro alpha gets drowned in volatility and eaten by fees before you can even catch it. And since we are talking about fees, if you test ideas in real markets, do it where fees don't destroy your whole edge. I trade on Bybit. The bonus link is at the description. and subscribe to my X channel. I post important market news and breakdowns there every day. Let's keep going. Do you know what is even funnier? The moon is not the first weird market signal people took seriously. Take the Super Bowl indicator. If an NFC team wins, the market goes up. If an AFC team wins, it goes down. Zero logic. It was created as a joke to mock people who believe in random hits. But then it started working, and Wall Street treated the joke like a real signal, until it failed again and again. Same with the skyscraper index. People noticed that the tallest buildings often appear near major crises. Sounds smart, but later research showed the opposite. Strong economies create huge buildings, not the other way around. And then there in Mercury retrograde, crypto astrologists say it brings crashes, fake outs and chaos, but the data says volatility doesn't rise, it actually falls. So the planet is not moving the market, belief is. And that is the point. Most magic indicators work like the moon, no real mechanism, just a few random hits people remember. Comment your favorite indicator below, maybe I'll test it in the next video. So why does this crazy stuff sometimes looks like it works? Simple. Most of the time it is just luck that survived the chart. Test enough random patterns and a few will look genius by pure chance. And the indicators that do catch something are usually not catching magic, they are catching a reflection of human mood, cheap money, greed and fear. Skyscrapers, sunny days, moon phases and different masks, same story. The sky doesn't move Bitcoin, people do. And yes, when thousands of traders watch the same moon date on TradingView, they can create a small self-fulfilling move, but the long-term backtest still fails. So the moon is not a signal, it's just a beautiful illusion that refuses to die. Now here is the useful tool, a lie detector for any indicator. 3 questions. Question 1. Is there a real mechanism or just a pretty correlation? Question 2. Does it work when market conditions change? If it works only in one era, it's not a signal, it's luck plus volatility. Question 3. After fees and drawdowns, can you actually make money with it? 3% per year with 70% drawdown is just nonsense. Take any indicator you use and ask 3 questions. In my X, I posted separate ranking of the best tested indicators that actually have a real foundation. Statistics, research, results, strategies, a serious database. Study it. The link is in the description. For 150 years, smart people blamed crises on the sun, the moon and planets, but behind all of it was always the same: human mood and money. The moon is beautiful, you can look at it before sleep, but it doesn't move your account. Liquidity does, and your own emotions do. Stop confusing one with the other. That's it. I wish you profit and a clear mind. See ya.